Okay, Ross, we could begin. I think let's quickly talk about the masterclass that's coming up. I think that's one of the first things. If you want to bring that up on your screen quick. So we have a great masterclass coming up in less than 3 days from today. We partnered up with John Boik. He is, you could call him a market historian, time traveler. He studied, in detail, from Wyckoff all the way to, some of the recent winners in the United States Championship. He's kind of, written books about the market and its history, how different and successful traders kind of tackled issues that they had, and how they made millions in the market. So this is going to be a 10 webinar series, and we'll be covering over 120 years of history, hundreds and hundreds of monster stocks. We'll have special guest appearances from recent, USIC winners, hedge fund managers, portfolio managers that will come in throughout, the different webinars from 1 to 10 and give you guys insight, talk about the market, and how they kind of, went through their journeys to get to where they have a proven track record, etc. There's a 230-page textbook that's part of the masterclass, and as TraderLion private access members, you get to I think you use a code to get an extra $100 off this early bird price. We've seen hundreds and hundreds of you sign up. And if you're interested, it boils down to about $30 a webinar with 10 webinars. And I think this is like a ridiculously cheap price. And you get $100 off. So you're basically paying $300 for 10 webinars. That's $30 a webinar. So I think this will be our best masterclass yet. We're covering over 100 years of history, and we're going into detail. Each of these are going to be 90 minutes to 2 hours, 90 minutes to 2.5 hour sessions, where we just deep dive into what different cycles, from 1950s to 70s, 80s to 90s, what was happening, what were the different winners, what did they look like, what did they do. So this is really a deep dive into the history of the market, which I think many of you can vastly benefit from. So with that, Ross, if you want to switch it over to your screen, we can cover the markets a little bit and see what you're trading, what you're looking at these days.
Absolutely. And do you want to start off? Should we start by? Bear with me. I want to make sure I've got. Yeah. Should we start by discussing general market before we get into?
Yeah, whatever. Yeah, whatever you feel is important.
I mean, I'm just starting.
Now.
So, are we good? Can we see my screen? Everything?
Yes. Yes.
All right. So, I would say so. We'll just starting with the general market. Over the last 3 weeks or so, we've seen a pullback, and then a rally back. We had the short week so far. With the day off yesterday, a half day before that. And so there's not a whole lot that you can tell. You'd almost say it's wedging up on less volume, but that's neither here nor there. That's as a result of the holiday and the missed week. The more important thing I would say is the indexes look fine. If anything, distribution continues to fall off the count. They're all holding up above, short-term moving averages, or the NASDAQ and the S&P are holding up above their short-term moving averages, no problem. They look great on all three time frames. Sure, we can always say they'd use more time, but as it stands so far, the furthest pullback we've seen is to the 21-day, just, I guess, a week and a half ago. And now that we've had some time to consolidate, move sideways, I would say that while we're focused on that same group of broad-based leadership, we're starting to see more setups again. And I'll keep it there instead of Ray. Do you have anything?
Yeah, I mean, I think the action's pretty good. The holidays kind of, things kind of slowed down a little bit. We've got a gap up on the Qs there, and we've kind of held that range, right? We gapped up a little bit, and then now we hold that range for 2 sessions in a row. a bunch of liquidity will come back into the markets as kind of the holiday week goes away. And we will likely, what I anticipate is get some sort of backfill into that gap, right? Just to test some sort of demand in the markets after that gap up. And there's nothing, that stands out to me as a red flag at the moment. We just kind of need to see what happens when we get a pullback, which is eventually going to happen at some point. So what I am doing is just looking at my existing positions, kind of creating different scenarios to say, if this happens, am I okay with this stock pulling into the 21-day? How will I treat that stock if it does do that? Do I add a position? Do I sell a bit into strength now? And then when it comes back, I can add back to it. What kind of preparing mentally for a eventual pullback, right? Things are not just going to go on a string forever to infinity. That almost never happens. And the market finds a way within the uptrend that we've had over the past, 6 to 8 weeks to frustrate people along the way. That's what keeps the trend going, right? That's what keeps the cycle going and the uptrend going, and the Qs remain above the 10-day, 21-day, and the rising 50 and 65 EMAs as well. Ross, anything from a weekly perspective, if you want to zoom in on that, make the weekly chart the biggest?
Yeah, sure. I mean, well,
you can hover over that weekly there, like the weekly window, and if you hover to the bottom of it, you'll see a maximize button when you do that. Yeah, right there. You see that maximize?
Got it.
Yeah. Now, if you want to scale that and quickly talk about.
So yeah, on a weekly, I mean, this is where it gets super frustrating, right? We've seen a lot of the liquid big cap tech just moving straight up. I mean, if you look at any one of those FANG ETFs, I watch FNGU, but that one, it's liquid. I look at that. I look at the NASDAQ, and I think I've probably mentioned it on the last TML chat and to Ray all the time. I don't know why I haven't just bought it's been very obvious what's been working. There's only been a few prime areas, right? You had to be on top of Netflix a couple times. That was one of the first ones to set up early. However, I would say this, that, looking at any view of the market, and even worse, if you really isolate those FANG stocks, it's made it look deceptively easy. And I know how it is also, like, we're looking for those sexy stocks, the new story, as opposed to sticking with what I guess you feel, quite honestly, like anybody can pick Apple, Netflix, NVIDIA, and Tesla. And it just so happens to be those are what's leading right now, not only fundamentally, but technically it has, everything going behind it. So, while as much as I'd love to find some sexy new semiconductor or some new thing that the market hasn't caught on to in terms of quantum computing, I'm just making that up, let's say, is huge. But anyway, that is not what's working right now. Eventually it will be. So I would just say that I've been paying attention to those sorts of stocks, but I've also got an eye on all of those names. I think, I don't know if I mentioned it in one of the recent market briefs or it was the newsletter over the weekend, just saying to keep an eye on those FANG type, highly liquid tech shares. A lot of it's been the semiconductor names, a lot of software names, and what have you. So it's kind of like its own leadership within the leadership, is, I would say. Is that a fair way to describe it, Ray? Like those big cap liquid names are, I guess those are the leaders of the broader based leadership. And while they might not have the best earnings and the sexiest stories, that is what's working now. So, and that's
Ross, when you look at the weekly chart, do you look at it from a perspective of if it's too stretched from the 10-week line, you get a little more cautious with your new buys, and if it's closer to the 10-week line within the context of an uptrend,
absolutely. So obviously here, as we're moving up off that 10-week line, but now that we've come in, you can see we've got rough, support, like you could say at 360 just above, and it looks like we haven't even, but yes. So as we move sideways and that 10-week line catches up to price, that you'll also notice, right, that more stock speed. That's more stocks have had the time to give us new entry points. That's always what I'm looking at, right? So as that chart fill, I would hope, right, ideally that we got a little more sideways action before it kept going. But really, Ray, if it was to just take off from here, for me to keep going, I would have to see a continued improvement, in leadership, meaning seeing more and more of what we've been focusing on as leaders, as getting to that point where there's too many, where the next questions will be, how do you hone in on the best of the best because my list is too big, right? So that's what I'm anticipating. That's what we want to see, whether the market continues to consolidate or it continues to be strong from here. Obviously the process of the leadership getting better will be faster if the market goes up, let's say, than it goes sideways. But ultimately, I think we all see it's gone quite sharply. But yes, Ray, that I don't mean to get way off topic, but it's kind of it's a day by day thing. I'll be watching to see how many more setups we're seeing and what I consider the biggest leaders, as well as how is that acting no matter what happens. But yes, as it continues to consolidate, show us support at that 360 area, and that 10-week line continues to catch up, you can see it's also the lows of these last couple of weeks or the highs of the 2 weeks prior. This is all very short term, but all in all, that's why I say it's very hard to get caught up in the short term swing. So as long as I don't see anything major negative, and on the weekly, it looks even, it looks that much better than the daily. So I mean, as long as we stay constructive here and the leadership continues to expand in terms of actionable setups, that's really all I'm looking for. So it's also why I would say, sometimes the market can swing around, and it's why I always say watch your stocks. I always try to remember how much money I've made on days that the NASDAQ is down a ton. And when you're in those leading stocks and the leader, that's why I stay away from those broader breadth numbers, and I really focus in on those. And as long as I don't see distribution or anything wrong on the indexes, I try to treat each of the individual stocks on their own. So even if we were super extended,
right,
short term but I'm seeing an entire group set up in 3 stocks that are just, I don't care what the market's doing if I can manage risk on those individual stocks. And I'd say that is, rather than trying to guess what the market's going to do or be worried that it's too extended, as long as it's not doing anything wrong and your stocks are acting well, focus there. And that is kind of what helps me stay in the right names, because the right names will hold up, especially at this point as the market's trying to, find. Really, you could, on a weekly basis, you can see here, we're just coming up. Everyone feels like, oh, we're not late on an O'Neill style basis. We're just barely up within the top of this base, a little consolidation here. We're still super early with tons of, potential secondary entry points to set up on what we've seen, as well as just brand new leaders.
With that, Ross, let's get into individual names and some of the names that you're watching at the moment. Yeah, if you go at the bottom of that window, you could kind of press the expand thing again.
Window thing here. Hold on, there it is. Okay, so
maybe you want to pull up some of the names you're trading or hold positions in at the moment.
I'll just go in alphabetical order. The ones that we have listed as the most actionable today, I really like. So AI is one of these. Let me move all of this from here. IPOs that we've been watching for a while. It's finally started to come up the right side. It's super volatile, but as the AI stocks, whether it be NVIDIA or any of them related to, Ray, correct me if I'm wrong, Adobe, Oracle.
Pretty much everything is kind of integrating. Google Drive today got added AI to their Google Sheet. Google Docs. So pretty much anything, at this point, that's a technology company, and AI could possibly play a bigger role, right? In each of them.
For whatever it's worth, you mentioned Google, it's, that's pretty solid day-to-day volumes picking up. So above that 21-day, you could buy above the 21, max stops at a 23. That's just off the top of my brain. You're, 1 to 2% to fiddle with in there to try and wiggle your way in early, right? As you're coming up off the 50-day, recovering those medium to short term, 23 exponential and 21. So, and again, also on all 3 time frames, it's looking good.
Phenomenal. But, let's pull up NVIDIA. That's another one, kind of leading the market at the moment. Let's get your thoughts on NVDA.
I mean, this is just, I almost feel like it's one of those names you can buy off, as it's touching the 21-day, as long as you are watching with stops at the 23-day, the likelihood at, the beginning of the move as it potentially being one of the top AI-related semiconductor names. I feel like as long as you're buying it with a semi-reasonable entry with a, to me, that on a $400 stock, you're looking at about $7 between the 21 and the 23. That's very reasonable. If you wanted to buy on weakness, and again, it's one of these liquid names where it's going to be very easy to manage risk if you wanted to buy on strength. So honestly, it's one that I haven't made big enough yet, but it's definitely at the top of my focus list in terms of those names, right? It's semiconductor, it's got the AI going for it, it's got the, it's in the right group, it's got the earnings and sales, especially the estimates as we can see here going forward. So yeah, that's, while it's nowhere special at the moment, unless you wanted to try and play it off the 10-day, and that is, there's nothing wrong with that either, right? If you're more worried about it going through highs or Fauci and you wanted to start nibbling at the 10 and use that 21, which it's shown, right, a respect for here, that's another way to do it. It doesn't really matter. But yeah, this is a top-notch stock that I will be looking to squeeze myself into, along with, let's say, a Tesla, which is more actionable over the last couple of days, harder on a holiday, right? Especially when you get the gap and volume picked up surprisingly enough on a half day over the day before. But you're sitting right here at a new swing high. So but like you said, Ray, if we do, what's kept me from adding to anything or buying like crazy is, the holiday week, we do have that gap there. And it's funny today, as tempted as I am, I'm glad you said that, right? I'm thinking today, I know Ray will, if I told Ray I bought this here, he'd just point to that gap. And I kept my hands, I forget which one I was just thinking about adding. But anyway, it's one of those things. So we'll see if it looks like it's going to be super stubborn here and hold this gap, fine. But this is one of those, even though it's not a FANG stock, one of those big cap leaders in the right space right now. So NVIDIA and Tesla I would consider some of the 2 of my top favorite leaders with great potential that have that, liquid, tight, organized characteristic to them. So
is Ross, AI being one of them? What's kind of like the second theme that you're trading in the market? Or
I'll be honest with you, it's gonna be largely these for now because of look at this thing. I don't remember the last time Adobe looked like this. It couldn't be more boring, right? I think of Adobe. I think of the PDF document. Obviously, that's not what's going on here. I haven't looked into the details of how they're bringing AI into their software.
They made an update of Photoshop as well. So
this thing just looks incredible on all 3 time frames. It's got high volume edge galore. This has got Ray and Jim Ropel all over it. You couldn't get bigger skyscrapers than this. I don't care what you call this, a flag, a pennant, a bull, whatever. This is extremely constructive action. Huge volume up, right? Showing the power it has. The volume's tapering off clearly as we move sideways around that 10-day. So this one would hurt if I went, this is another one. While, I don't know that as of yet, I'm going to say it's got that same allure as a Tesla and an NVIDIA that we have been a little bit more solid before. But anyway, yes, I'd put something like this up in that same group. And these are the ones I'm focusing on, as boring as it is, as much as and I'm not ignoring an ON, which I think looks phenomenal. I think that, yep, that, if I'm not mistaken, is on the list of the more active stuff. But even there, like if I'm looking at, and I don't consider these small, I know we've talked about these two, right? PLPR and IoT a little bit.
Right.
Obviously, these are smaller, lesser known names. I think PLTR has been known, if I'm not, I mean, people were talking about this one before it ever IPO'd. So I know it's got a hot story behind it, but you know, it's got that similar chart to AI, right? So I'm thinking, you know, maybe AI starts to follow that, and then IoT, similar, but not quite the same pattern. I love the way that it shook out to its 23, bounced, closed top of the range, just back
And
under.
volume increased today. So
Right. And look how little it was. You know, so that's and what people miss today is, my guess is IBD, for example, because people ask this question, will count today as a distribution day on the S&P 500 because it closed down 0.2% exactly. Volume picked up. I don't care if it closed down 0.75%. The fact is it closed not as well as IoT. Let's just look at SPY, as that's well above mid-range as volume picked up for the day. Not only is that not a distribution day, it's an accumulation day. So I just wanted to point that out, as, you know, and IoT reminded me of that, right? Because, you know, right, we saw it sells off on big volume, but even we shake out and then close back at highs, back above the 10-day, just under, on bigger volume. That's actually a healthy, constructive sign of strength and day of accumulation. So
right. So Ross, let's talk about IoT a little bit more. So are you looking to kind of add as it kind of builds that right side out, or are you going to wait for it to clear that 28 and change to the top side if you want to add to your position? How do you kind of tackle that, assuming that you already own stock, let's say from 25 area, right? Somewhere in the 25s, or when it came back into that 21 day, right?
Mm-hmm.
You started a position. How do you kind of tackle, would you add, would today be a day to kind of add some stock and then add again at 28 to round out that position, or you just kind of wait for that top side or that trend line to kind of break?
You know, I'll be honest with you. I did take the slightest little nibble at just before the close today. I couldn't resist, you know, that little mini hammer off the 23. So, but I added very little. But however, if I see the volume, if it looks like it's going to clearly be a green day and it's going through that 28 area right here, then I'll pay up. Those are the times I'll pay up for it. I don't care. I'll just you know, that's when I'll go, okay, I need another 10 or 15% and try and, you know, buy it up as fast as I can, depending on how liquid it is. This one, excuse me, trade's pretty liquid. I mean, 3.5 million shares, most at $30 is plenty. But yes, I do a little bit of both, but on a day like today, I waited to the close. I didn't buy it off the 23. And I would tell you this, on that tiny little piece, here's what I'm looking at. We got the close back above the 10-day. Intraday, I mean, I really need to, I'm not going to give it a lot of room under the 10-day tomorrow if it winds up there. The part that I added, because I'm watching the 23 for the balance. Are you with me? Yeah. So I really, you know, so that's, I would have been better off today actually doing it, buying it off the 23. I didn't notice it till the close. That's also why I bought very little. Had I happened to catch it, I did not catch that alert today. I don't even know that I had the low alert set, but had I caught it within 0.5% of that 23 day today, that is definitely something I would have considered as well. You know, and then I go straight to that intraday chart and I pick my line in the sand intraday if I'm going to ever play that game off. But it's an awesome way to play the moving averages. It's the only way I do it, when, especially for the stocks that just show a clear respect for one average. If I will almost without fail buy those stocks, you know, anytime I see them within 0.5% of that moving average, and it looks like I can get in and be wrong with less likelihood than not being wrong. And even if I am, it's not going to hurt me. And I'd also point out, I just like the way this is looking all 3 time frames. Like, yeah,
weekly's looking really good.
I mean, this huge volume, the drift in, even this nice tight month so far. You know, the hard part is on the monthly, the stock could come all the way into $22 and still be fine. but there's no, there's no way I'd be holding in past $26. Like you said, that's probably my line in the sand underneath the 23-day, and it's also because I don't have enough profit on something like this yet that I'm not going to give it. I'm definitely not letting it swing to the 65-day. I'm not ready for that yet.
Let's zoom into the weekly a little bit and talk about the weekly on this, because I think it's almost looks super textbook, right? If you want to walk through, I guess, Ross, like the
Sure.
first week and how it kind of built that base.
Honestly, the crazy thing is, before everything to the right happened here, this week looked enormous, right? It's the biggest week except for the IPO week. So this was already looking huge. You get the follow-up green weeks. And here's your ultimate low on that big. That's your highest volume.
Highest
what are you
volume.
going to call that? Highest volume, I guess. Highest volume since IPO, right? We got the follow-up. The more important part, so we're holding the low. And then you can just see volumes clearly picking up into a crescendo here as we get above all of the moving averages, which are, we've got, it's still a very new stock, so we don't even have all of the moving averages. Actually, I keep thinking when we're looking at a daily chart, this is weekly. So this is a 30, 40, and 50 week moving averages. So the 50, 150, and 200 day, so this is a significant little launch pad as we come through here. And then for those of us who have been looking at the way we do things for a while, you get your first obvious consolidation pivot here.
Right. Russ, at one point it had about, prior to that first big gap up, it had 8 weeks up in a row where you see none of those weeks closed red, right?
Correct.
Does that kind of tell you or give you any more conviction as to if you were trading it back in April, May, and June, that, it had 8 weeks in a row where that at that point you could kind of, do you take away anything from that?
That is, Bill would point to those big pushes up on all that volume. I mean, that's just, as he tell you, that is the sign of the elephant jumping into the bath. That is a sign of, I think he would say, clear power and strength. A lot of the adjectives you'll see me spitting in these briefs and what have you are words that have stuck in my head from him. But yes, that is significant. And so, and you can see here, this is one I wouldn't be surprised if I added here and ultimately got shaken out, and it happens. And this ultimately is fine, right? It shakes out back to, I'd say, where, if we were going to draw another line, it would be here. You get the shakeout and right, you get that hammer close back above and you take off again from there. But yeah, you can see volume really tapers off in this area here as it's, putting in its lows. Volume tapers off each week from, even this first big week down is well below average. It continues to taper, and then it's straight back above that 10-week line on huge volume, which was, again, you can just wait to play these on strength. The more you look.
Would you treat this at this whole base that works? It's kind of like a W pattern, and then you square out, and then you break out of that, right?
Absolutely.
Now you're right under all-time highs. Would you still treat this as a primary base, even though it's had a couple of breakouts into the all-time high?
To me, this is still, I mean, if you wanted to get, sure, you could say, it's hard for me to count these. I mean, while it is weekly as base, to me, this is just one big weekly IPO base. So as far as I'm concerned, this is early up the right side of the bigger base. And right here, we're just putting in that handle there of double bottom with handle, right? So call it both. It doesn't really matter. It's super technical, filled with, it's super constructive technically and clearly under accumulation. Sure, anything could happen. But yeah, I mean, this is your classic, that classical weekly pattern for sure.
Awesome. Any other positions that you're looking to take, into the end of the week? What you see is coming up in terms of events that you want to let people know?
Before that, I'll point out this is another one. I mean, we'll go back to the daily. You can see it on the weekly. As boring as it may sound, right? You're not adding net. This is it's there we go. It's just been beautiful, right? It's first easy, super easy early consolidation pivot. You're in, pulls back to the 10-day, and it's just been this super liquid, smooth, organized hot ride higher. That, you know, a few weeks that we were pulling back on the NASDAQ, we dip under the 10-day a little bit, and here we are again trying to come out to new highs on bigger volume. So this is another one, you know, in that FANG area, I'd say keep a close eye on. This and Tesla were the two today that are at areas that could be, you know, areas you could play from short term. So, and then moving on, Ray, and we can go on to any stocks you want to look at. We can take a look at what anyone suggests. But as far as
if you guys have any stocks you want us to, someone mentioned UPST in the actually let's start with Twilio.
UPST for whatever. Yeah, that looked fantastic today. I was did not buy any, but that was one that I reset a bunch of alerts on. Twilio also, I think, looks fantastic here. That outside day, like that hammer bar above, you know, the moving averages, and you can see I've got an alert on it. I think it looks fantastic in this area of the market.
We've got IoT. We've looked at it already. We got U. If you want to pull up U, symbol U.
Yeah, and by the way, so you know, sometimes
Unity software.
Yeah, I'll tell you what we're gonna do. Is that
Unity? There we go.
And you can see, so that one pulled back today. No big deal. Volume picked up a hair, but, you know, versus a half day, still stayed below average. We're still above its 10-day. And yeah, well, that's a bit wide. It's not out of character for it. So I do like this one a lot. You just got to keep in mind the super wide ranges. So, yeah, managing risk is just a little, you got to be careful buying it. Be very careful with how you're buying it and how you're managing your stops. That's all.
Yeah, and it's super early on the weekly as well. It's not even outside of that bigger consolidation to the left side where, you know, that biggest down bar was May 9, 2022. So it's kind of still in the woods, right? It's not really out of that top
Correct.
Side of that consolidation.
It's still struggling, right? You can see it all right here. It really needs to come up and out of here, and then who knows, maybe, I wouldn't gamble on it, maybe you get a character change, but if it does come up and out, you can see once it happens, it can really get going. And with a little luck, once it gets through all of that larger resistance you were just talking about on the weekly, you can see it on the monthly, it'll have the room to start, you know, get closer to $70 and instead of stuck in the low 40s or mid 40s, I should say, that 44 area.
Let's talk about there's a mention of crypto with MARA starting to pick up with big volume on the weekly.
Yep. So I'll just on all three time frames. So there's tons of them, right? So MARA, I mean, here these are the more liquid ones, right? RIOT.
Yeah.
Just trying to think, you know, so this is not pure Bitcoin. It's not an ETF, but this,
they own a lot of
Bitcoin. CFO of this, but he's basically taken all of his company's assets and put it into Bitcoin. I don't even know. So, but yeah, he's made it, and you know, so this is basically just if you look at if you look at just BTC USD, you know, the Bitcoin US dollar, this is almost a mirror image of that chart. I think it may have changed now, but anyway, so that's another one. A lot of them are lower priced, I've noticed. You know, as I was going through, I don't know if like stuff like this. Oh wait, no, this is a thin, but I've noticed the ones that aren't super thin, right? 3,000 shares at 40. I mean, you can't touch this thing. You just be stuck in it. But a lot of I've noticed the Bitcoin stuff is lower priced.
Yeah. What do you think of the theme? Like the Bitcoin chart itself? I know you mentioned that a couple of days ago, and you said
I think it's one. I'm just pulling it. Yeah, it came back in. I think it's shaping up really nicely. on the daily and weekly. If it can, it's working on, I guess you could call it, it's not a true cup and handle because it's already made a new high before it started moving sideways, but it's that sort of, I'm watching Bitcoin closely. It's not like I'm ready to put on a huge position in MicroStrategy or Riot or what have you, or any of them that may be more closely related to Bitcoin, but I am watching it.
You could pull up BITO that tracks the Bitcoin futures, ETF. That's the one that it has $1 billion under management. So,
gotcha. And here, let me see. I'm just gonna. Can you see it here on?
No, I don't.
No. Okay. Can we?
If you just want to pull up, BITO here.
I had another window of deep view open, but anyway, so yes, then this looks similar to the actual Bitcoin. If you check out Bitcoin, BTC, USD, if you have a system that has that chart, this looks much similar, but weaker.
Yeah. Awesome. Any other stocks you guys want us to go through? I could talk about a little bit what I'm doing. So I've had to kind of adjust what I'm doing with size and all of that. So I'm sticking to super liquid. I really have 2 positions on at the moment, IoT, PLTR, and I'm kind of trading around. If they have a good day, then I could go out and buy something else. If they're consolidating and not doing much, then I'm just kind of watching, and I've built out quite a bit, sizable positions in these 2 names over the past week. So it's coming into today, I kind of added right around the 2660 area today on IoT, and PLTR I'm just still kind of watching. It's right above that 10-day. Each of the days on PLTR are right above that 10-day. They're all holding the 15 mark, and it's just not pulling back in. I think it's a positive sign. And then volume today was bigger than the volume yesterday. That also tells you that as more people come back from the holidays, this is kind of having a positive reaction on the stock itself. So other than that, Ross, I had my eyes on IonQ. I didn't really act on it, to be honest, but I was just watching this one. This one didn't have much of a pullback after that big move up, so I caught that 22% day, but after that I'm kind of watching for some sort of consolidation and maybe a pivot versus 15 eventually, right? Where it consolidates, the 10-day catches up, maybe comes back into the 10-day at about 12.5 as a pullback, and then we'll see what happens there. Felipe is asking about your thoughts on GRBK, if you want to pull that up. Sure. GRBK. Green Brick Partners.
Yeah, it's building stock, if I'm not mistaken, right?
Yes.
Yeah, home builder. Consumer, I don't know here. You know it. Let's check. We can take a quick look exactly what they do. Land development company. Okay, so it's not a residential builder, but it is that group. Land development. So I mean, the chart looks, so the group, as we know, as a whole, has been fantastic. The chart, what can you say? This is what we wish the sexier tech and biotech stock individual charts were looking like, right? These straight up organized liquid moves holding moving averages. I mean, it looks great across the board on all 3 time frames in the right group, so on and so forth. We can see it shows a solid respect for that 23-day exponential or that purple line. So
the other one is MNDY, Monday.com. This one I remember we were trading around $400, right?
Yep. And this is another one that just probably needs a little bit more time. I've had it, you can see we've had it on the list recently, or the report just recently, and one I've been watching for a while with the rest of the software stocks. I really like the setups. You can see it here on the weekly and monthly, right? You can see that high volume edge on the monthly, the big outside month, really tight. Here, let's get rid of all those drawings. The really tight action as it comes in. By the way, these are 6 and 12 month moving averages. Why? because that's what I decided to put there. I have there's no magic to them. I just put 6 and 12, half a year. This is just that classical. You begin with the high volume here, you come back into the 50-day, again, the even bigger volume, follow up, and you drift into this 10-week line, which happens to coincide with the prior area of support. So you can, on a daily chart, you want to be careful, right? Because if you're trying to buy support off the 10-week line, you go in for a little closer look, you've still got $13 between where you are now and that actual 50-day moving average. So it's one, as you can see, we'd like to see at least begin to push through that shorter term resistance on volume. But again, we're watching closely. I'm watching closely individually. It's got, again, the right group and certainly phenomenal fundamentals. It's one of these IPOs that came out at the wrong time too, right? Like right before the market got heavy at the end of November 21, and it's never really had a chance. So,
Ross, as it broke out on this recent breakout, you could also see that there were about 4 days or 5 days of tightness after that the gap up, the most recent gap up. Do you see that as a possible character? Because it hasn't done that in this entire base. I can't find 3 days where it kind of closed super tight. Right.
It's kind of gotten sloppy. So it has gotten sloppy again. I'd like to see the strength and then it start to trade like this again. But yeah, you are right. This is sloppy, wide and loose action. For what it is, I'm much more encouraged looking at the weekly.
Yeah. It tested almost. I mean, it got close to the 10-week line today, but
yeah. Now here we can do this, so I don't have to erase them.
Yeah, we could keep going now. Let's go to the next one, SKX.
If that's the line.
Skechers.
Here, might as well put an alert right there. SKX. Yep. Look at that. I missed it come back through that 50-day moving average. Yeah, that looks great. I mean, again, the whole group, some of these specialty luxury Skechers. I mean, obviously ON, we looked at. And it's not, apparel and shoes goes together. So here's another expensive specialty Lulu. Just off the top of my head, and the reason I'm going here is the group is working all together. So yeah, Skechers looks great, especially now. Thanks for pointing it back out. I think I've had this one on and off my list. I think most lately off, and it'll have to go back on now. So yeah, and then again, all 3 time frames, as we can see here on the monthly, it's done. We got if this could be super powerful, if it really works, it's got this giant base, I guess, going back to 2015 base on base thing going on. So if it can get up and out of there, yeah, who knows? If based on that monthly, this thing could turn into a powerhouse. So I'd keep a close eye on the group and Skechers alone. So yeah, right off that 50-day, and definitely worth putting an alert on. And here's what I'll do: I'll just put a tight alert on it like this, just so I know where it is tomorrow, and until it gets into a position in my brain and I figure out what I want to do with it. But this is often what I'll do. So thank you for putting that back on the alert line list.
Awesome. The next one is I think Kurt, we already covered UPST.
That's fine. No, I think I just
let's do that again. Yeah. I actually had a question for you on UPST as well. So yeah, go ahead, Ross.
Yeah. So nothing here. It's just another one of it had a better chance in 21 than Unity and some of the other ones did. But I think but it's the AI lending platform. So just because it's got the software and the AI going for it, and while it did have one heck of a move, I still think it could potentially do a lot more. And based on what I've learned from you, Ray, and combined with what I've learned from Bill, volume means a lot. So these high volume that I'm looking at here is significant to me. This most recent action, it's tough to call it. You could call that a little bit wedgy, right? It's wedges up along the lows. Volume kind of tapered off. It's certainly not above average volume. I'm I am watching, I did not buy any today, but it is very interesting to me. It did pick up volume a bit today, and it is sticking around that, whatever this is, $39. What's the high here? 38.84. So roughly $39. But ideally, I'd love to see, a pullback into that, a little drift into the 10-day before it goes. That would be right. A drift into the moving averages as they all converge underneath. That would be my dream scenario. But if giant volume comes in, again, that's what's going to make me ignore the little bit of wedge, right? If we see the giant volume come in on top of this pickup today, I'm going to figure I might go just come right here and say, okay, $37 is my line in the sand, just so I have something to work with, or the low of this, whatever it is, volume may entice me to pay up for it. And then based on that, I will pick a logical stop, right? Obviously, it's not going to be at the 10-day yet. That's way too far down. So it's going to be a combination of where look to the left, look where we are now, a recent low, and 37 is the whole number right there.
Awesome. So. Let's I had a question for you on the weekly. If you want to
sure.
Maximize that weekly. So this one's come down quite a bit, right? Traded obviously in the high, 200 at some point. And much of the move has been kind of straight off the bottom with no consolidation. Right. And it's going into an area where it moved from about $80 to $30 in that 1 week to the left with big. So are you less inclined to kind of take a risk, like when you grade a name in terms of how easy it's going to be for you to accumulate, trade, and not be frustrated at the same time? Do you look at kind of the left side, how much of a pullback it's had? How do you prefer, or it doesn't kind of matter?
It kind of matters that we've gone from 22 to 400, right? Because I've already, so this is a very tough one. It's a huge move. What is that, a 20-fold move?
Yeah.
So from the middle of December 2020 till in less than a year. I mean, on one hand, I want to say it's tough to say. It could have easily kept going based on stocks we've seen just like it, right? So this is exactly when the market got heavy, November 21. So it's tough. So this one's a little harder. It's not like it came out, it moved a little bit and then rolled over, because it's already had a 20-fold move. It always sticks in my brain. The guy I used to share my office with at O'Neill before Mike Webster, I'll never forget. Bill was in our office. He said, Bill, hey, I forgot what stock it was. Do you think that, this stock has come too far already? And it wasn't one that was even, and it was one of these, well, the thing's gone from, 30 to 300 in the last 13 months. What the hell else do you want from it? Was his exact quote, which I thought was funny. So I always keep that in mind. We did have that 20-fold move. It wasn't a quick double or a triple, which is still pretty big. It was from 20 to 400. On the flip side, it's still a very new stock. It did get smushed by the heavy market. It is, it's in the right group. It has enormous estimates. I would say this, I've learned from Bill that in general, especially the estimates that go further out tend to be, these guys try to be conservative. I mean, it's hard to guess that someone's going to grow at 100 and 300% going out a year plus. So when they're putting these, they're looking at something. So that's all the sort of thing that I'm, balancing in my head. And yes, Ray, the move from here all the way, the fact that we've undercut, we're starting again. For me, this is still valid because we've really beyond undercut the IPO low. So for me, we're starting fresh again. We've got incredible fundamentals and technicals. So as long as it doesn't do anything, I think that the way that but the way that the methodology would have you enter and manage risk on this stock, it's one that I'll be, even though it's one that maybe could have been considered junk off the bottom at some point. I've now upgraded it to watch list status. I would definitely buy this stock. I mean, thing trades. This is the weekly chart, but on average, it's super liquid. It's very liquid.
Yeah. Let's go to.
But yeah, I would love to erase that whole left side. I don't think it's necessarily erasable, but I don't count it as much of a penalty as I might something else that has been around for much longer in a different group that's had maybe even a 10-fold move instead of a 20-fold move, just just depending on the stock, the situation, context, right? So
awesome. Let's go to DT. Ticker DT.
Yep, that's on our actionable list this evening.
Yeah, this one is looking really good on the weekly and the daily.
Yep, that's right. I forgot we're on the weekly. That weekly looks so good. I was content to not even look at the daily, but again, all three, you've got 3 months tight. We'll make that up for now. Let's move to the weekly. But again, the big volume up, nice sideways action as volume's declining. You can see it here. It's constructive, organized, tight. You can see that volume. The big volume is on to the upside as it's trying to push. So yeah, I
can't also find, like, if you look at the monthly, it's never traded this tight in its cycle, right? Ever.
So. So this is, I mean, you see, we have it on the active list. Look at the fundamentals, look at the group it's in, look at the chart on all, so I really like the way that it looks. And yeah, that monthly that's a big character change on the monthly. And then even the weekly, look how wide and loose it was. It's starting to get much tighter here. So.
Yeah, and year over year, the estimates are this company. It's not the biggest growth estimates, but it will consistently grow basically from a revenue perspective of 1 billion to over 3 in a couple of years here. So, yeah, I really like this one. And then also it's tight right around that 50 spot. It's held the 50 spot for over 4 to 5 sessions in a row, and it's trading in that wick that it created, right? It tried to go, came back in, but it's not selling off at the same time. So it's being held up. So, and then you look at the weekly above the 10-week line, and then the monthly shows you that, it's never had 3 or 2 tight months even in a row that you can kind of, take a look in terms of just the ranges. We might have to create a 3 months tight scan or something.
Yeah, no, it can't hurt. I mean, I would say, I mean, without doing a big back test, I've found in general patterns like that, if the longer term chart you find them on, typically the better they work when they work, right? It's not, I don't know that it would say they work better in terms of their predictive value, but I'd say, right, just like anything else, the longer the base, if you see a 3 months tight, I'd say that the same reason that Bill likes it on the weekly would stand true on the monthly. So for sure, it couldn't hurt.
Awesome. Next one is Uber. Let's go to Uber, and
this is one that I didn't get into, and I still kicking myself for it. I love Uber because I use it. It's just, it's become where it's not. I mean, it's the verb, right? It's in songs. It's everywhere. So I understand what it is. I can, it's got the earnings and sales. Everything's, you can see now turning around. The estimates are huge. We can't. So yeah, Uber, I really like.
It's saying that 2023 will be the first time from an EPS perspective that they actually have a positive EPS. If you go to the annual.
Yep.
Right. And then 2024, things apparently are picking up where they're going to be earning 83 cents per share, which is kind of crazy because it's never had a positive quarter, right?
Right. They've been losing. Right. So money. That to me, it's amazing. They're making money now, and this is really taking off. And of course, I was still not, I missed it, and I've been watching it, and I haven't figured out a way into this one yet. But
it's almost like the value funds will come in, the mutual funds will come in. Just the fact that it's making money now, they'll come in and park some dollars, depending on their what their methodology is and the white paper that they put out when they came up with.
It trades $80 million of stock on average a day. It makes me very happy. And I mean, look at this. You're working on 4 weeks tight now. this isn't an ideal week here, right? Kind of a little bit closed below average, but the fact that we closed, I'd have to measure it, but maybe we're 40% off the low there, and working on a fourth tight week. So,
Ross, when you worked at William O'Neill, did you guys take a look at annual estimates and kind of key in on them to accumulate a stock over a period of time? Or
yeah, Bill, that's how Bill. So let's say he found, let's say it was an Uber that he thought was the leader, and he wanted to come up with a target. He would use the estimate. I want to say going. I have the. You know what? I'm not gonna. So anyway, yes, and I'll rather than getting into a whole diatribe about that whole formula, I'll get it for everyone to look at. But yes, he did look at that, and that is what I was referring to when I was talking about Bill saying when he looked at estimates, and it was much more the annual estimates than the quarterly. When he was doing that process, he would take that estimate and then add to that. I forget what it was. I'm going to say maybe 20%, but whatever it was, he says that's typically conservative. So he would actually bump that up a bit. So yes, he does look at that, especially early on when he's trying to come up with some sort of projection on what he thinks may be a big leader.
From a revenue perspective, in terms of estimates, was that kind of at the forefront of what you used to look at all, or was it purely EPS?
No, it was both. I mean, if the revenue stories are phenomenal. So yeah, there are some. I mean, this has both, right? It's gonna start earning money in a big way soon, and the revenues. It doesn't take a genius. Just look at this from 14 billion. Granted, this is quarter to quarter, not over quarter, but I think any one of us wouldn't mind a business that was growing at this clip, whether it be billions or millions. That's phenomenal, which is ultimately, I'm going to say, more important, especially a growing or steady stream of revenues. As long as that's present and I can see that institutions are buying the stock and the technicals are good, I care a whole lot less about the earnings.
It's kind of funny that 2023 they're projected to be, making a little bit of money, and it starts to trade tight, starts to respect the 21-day and the 10-day, and yeah. It's acting a very different than how it acted in the past, right? If you just look at even this whole base that it's kind of built, it's not traded this uniform type of action.
It's as pretty as it gets. I mean, you're pushed straight up into the breakout. So it's not surprising that this failed here. And you come in, you test the breakout, the 23-day, and you're off. You're respecting the 10 and or 21, 23, the entire. I mean, this is, and so yes, it's the verb. It's this could turn into a giant leader potentially, and definitely one I have at the top of my. This is a top of my watch list as well.
And Joseph, to answer your question, my thoughts are pretty much the same. I've seen the estimates on this. It's probably the best estimates in terms of like increasing into the future type of thing. And the stock is trading really, really well. 80 million on that gap. And then the whole character of this thing has changed. It's respecting the 10-day. It's anytime the market's up a little bit, it's going up. Anytime, you expect some sort of pullback, it's doing that. So it's kind of following that model book type of action right from that gap, and then all the way into this run from 36 to 45 area. I own a little bit of it. The way I trade now is I have to accumulate positions. So when I say I own a little bit, I'm nibbling right around the 10-day to see if I could build up a position, and then I want to round it off, into strength. With the amount of money I'm managing now, the way I think is very different as well. So I rather, even if it comes into that 21-day on lower volume, I'll start buying a little bit to see how it acts, and if it starts acting right, then buy more into 10-day, and then eventually I'll use the traditional pivots that I used to. 45 is going to be my cap. I want to get most of my position in before 45, and maybe at this one you could go at the market. You could just get 10,000, 15,000, 20,000 at the market, and it won't even move a penny. So that's not a problem with this one.
You'll see as you get older, even
Yeah.
if you don't have that much money to trade and you want less, or at least for me, I've wanted less aggravation.
Yeah.
I manage a whole lot less money than I used to, and I'll still always stick to the highest price, most liquid stocks because they're so much easier to deal with, period.
Yep. Awesome. There's another one, RMBS. I think this is a software
Rambus looks
name.
great. Oops.
Yeah.
RMBS.
Semiconductors.
See my, I don't know what happened there, but yeah, so there it goes. So yeah, semiconductor stock. This is another top-notch one that's just been stair-stepping up its 10-week line. This is one of those ones you can see it doesn't really have a respect for the 10-week, doesn't really like its 50. It kind of likes its 65. This is one of those where I might even fiddle with my moving averages to see if it had one or two that it did seem to cooperate with that I'd probably just. But anyway, long story short, this one has been going right. We got a big base breakout, so while this is kind of base on base on base, maybe you'd want to be a little careful, right? Be a little careful in so much it's doubled from this breakout more or less, right? So from roughly low 30s to low 60s, almost 70, well, almost $70. It's on the other hand, it's a leading semiconductor stock. It was one of the first ones out. Besides that, it doesn't have a clear respect for a moving average, or at least one of the ones that we have on here. It's a big leader. It trades in a super tight, organized manner. Just look at the weekly. Forget the moving averages that we have on there and look at the volume, the price volume action. It's every time you've got a big week above average. And I mean, not everyone. So we've got, we can go week by week for the most part, except here we've got a week that closes lower. And even though volume was above average, it declines from the week before. So, and you can just see these giant volume weeks. You've got outside week up, and then we move sideways volumes. So in that respect, it's one that I'm still watching closely. It's not one I would buy on weakness just because it is, around a double from its original breakout back here. However, I wouldn't hesitate to put on a legit position through this 66 area. Well, whatever this is here, the high is 65.24 is that area I'd be watching on volume. And then again, we'll see where the moving averages are and what I'd use as a stop from that point. But while it does look extended, it's still at the top of my list, but I'd be very careful not to buy it on weakness and make sure until I was in and up on it. It's one of those things that I'd probably have a spare alert or two on and possibly create. I do my best to use all my alerts to use sell stops on an end of day basis, especially in a bull market when things can be weak all day and snap back at the end of the day. I lost my
train of thought. So we're basically, if it comes back into that 21-23, maybe does an undercut, right? Fills that gap a little bit. We'll build out that right side after that big run, right? To the upside. It's gone from 40 to about 70 odd. Give it a little bit of time. Let it build that right side base. Test that rising 21 and 23 EMA, right? Maybe fill that gap that it recently had in that 4-day range, undercut that, see if there's demand that comes back in to scoop it back up. But I think if you look at SMCI, Ross, if you want to pull that one up.
And that's another one, similar situation where it's just is. Yeah. You look at this and it's the same thing with Rambus. This one looks even more extended. I had someone asking me about this one over the weekend, and I'll tell you the answer to this is I honestly just don't know. It's that same sort of thing where I've seen stocks like this continue to triple and quadruple and septuple from patterns like this. It's also why, I learned in a market like that where if you didn't buy the new highs coming out of this crazy extended looking thing, you just missed 1,000 points on the biggest leader kind of thing. It was, but that I've learned my lesson about it. You learn your lesson quickly that only works in certain markets. So from that perspective and how powerful everything is, I know I've seen stocks like this, even though it's had this, I mean, look, same sort of thing where let's just call it from 60 to 250, 66 to 250. It's not 20-fold, but it's still a huge move in a short period of time. So it's one that it's a clear leader, and I'm just not sure whether to consider this late stage and stay away from, or is this thing such a powerful new leader that you must have some. I haven't made that decision, but I'm leaning towards, it hasn't done anything that's made me drool for it yet, but I'm not sure what to do with it. If the volume was enormous, it's one that I would probably give a chance or two, but these are the ones that I look at, and if I don't get traction, if they don't work immediately after I buy them, I don't even wait for sell stops. This is one of those things, to be fair, that if I saw the volume going through a short-term area, I'd probably overbuy it because it's super liquid. And then I'd go straight to an intraday chart. If I was lucky enough to have the traction and have it go, I've always got a spot before the end of the day to sell what I overbought, right, to bring down my average a bit. Otherwise, if I don't get that immediate traction, if I'm lucky, I get a little bit and then it starts. But and I just get out of the way.
Right.
And I really don't know any other, so the answer is I don't know how to play this one yet, but it's not one I would want to miss because it could blast off, but I would be very careful playing with it. That's all. And the only reason I would do it is it's, very liquid, 2.5 million shares at $255.
It's pretty liquid.
I'm not buying enough that I can't get in or out of whatever I'm buying in a flash at the market.
Let's take a look at GEHC. That's another one from the actionable list today from our market brief, and get your thoughts on this.
Yeah, so I mean, we've got that giant IPO, one of the rare IPOs, right, where we IPO and just head straight up, I think.
Yeah, this was a divestiture or kind of a
it was a spinoff. Divestiture or spinoff. I don't know, whatever you want to call it. And they spun it off. Biotech and healthcare was doing really well at the time, which didn't hurt. So it had this phenomenal run straight up. It's 21 at worst, 23-day exponential. And so for me, this is just that first blast of strength. We're now building a base, and I like the way that it's I just like the way that it's shaping up here, coming through. So you could say it's already come through this first little bit of declining tops line. And I'd be watching this area here. Oops. There, we can set an alert on it just to make that go away. And then maybe I'd start looking back, back here. You can see that's where it's getting stuck. So again, actionable in so much that you've got the little launch pad of moving averages, including the 50-day forming under price. And I just like the way volume kind of picked up as it's perking above its averages. Volume was very light yesterday. It still held up, so action's been very constructive since it's been coming up through its averages and through that first declining tops trend line. So I'm watching to see how this develops here. I don't have a solid entry plan for this one yet, but it's one I've got a very close eye on.
Awesome. Excited to be here. Can you take a look at CELH? Let's pull that one up. I was looking at it earlier.
Pretty short interest in this one, if I'm not mistaken. And I mean, it looks fantastic. I mean, this is the kind of one where if it was one I was super focused on, I'd be potentially nibbling off that 10-day moving average, watching the 21-day, seeing if I could work my way in, right, using that 3%. And then hopefully by the time I'm in there, the 21 or that 23 exponential catches up. And a lot of times it won't matter because at the end of the day, you've got, that price support as well. So, but yeah, this looks fantastic.
Awesome. So Richard's here.
Got our big high volume. I mean, that high volume edge you got. I mean, that's enormous.
Yeah, this one when they did the deal with Pepsi, right, Ross? I think back in where it gapped up, they did a distribution deal with Pepsi. It got super liquid, gapped up, and then went sideways. It went into a bigger base. and then now it's kind of come back up. It's done, kind of being that crowd favorite after that Pepsi deal, and now it's kind of moving on with the added revenue that they're going to get just from that distribution deal alone, right? With
Yep,
Pepsi.
you can see we got 3 weeks tight drifting in here on lighter volume. And if you look at this, look at all those nice tight closes. Volume comes in as we pick up on the monthly. We're holding up nice and tight, confirming what we're seeing on the weekly. So, yeah, this looks good in a million ways to every which way to Sunday, right?
Yeah. Let's see. Let's take a look at ARRY. I was looking at kind of tracking that base, and it had a big down day today. So you want to talk about, I mean, it kind of shows the importance of, you want to wait for the bases to fill out, and you only want to get involved once it's, above a key spot. I feel in this case, it's like the 25 area. It has to get above that if it's going to go anywhere.
Yeah. Especially this one, it's a super wide and loose one, so you'd want it clear, and then obviously confirmation from the others. The group has just been tough. I've been slowly erasing them off my watch list.
Yeah, we got FSLR. I don't think that's going on.
That one's still struggling a bit. You can see struggled under the 50-day for the last couple of days.
CBG.
Oops, that wasn't it. I was looking for SHLS. Oops, sorry. That was my bad typing. Which one did you? Oh, CEG, right?
Yeah, CEDG is not. Yeah, the whole group is kind of a mess.
Oh, SEDG. I'm sorry.
Yeah, SEDG. CEG, I think, also has a component of solar in there. Like
CEG, I like. I mean, CEG and CEIX. I don't know. I know they're energy. I don't know that they're solar, but those are both setting up pretty well.
CEG is it's like utility solar type name.
Okay.
So. Awesome. Any thoughts on IoT? Let's cover GTLB. I don't think we've covered that one. Richard's brought up GTLB.
Looks fantastic. I mean, that's on the larger list of stocks that caught our eye after the close today. These are not at all prop, but it's almost that. You could call this almost an island bottom, right? What the island top is. So you got the gap down, the gap back up, and then super constructive action here right above that 10-day moving average. For as wide and loose as this thing trades, the market during this period of time, that few weeks that the NASDAQ came in and then moved back up, given the way that this thing trades, it held up incredibly well, especially
nice reversal today as well, where it held kind of that 3-day range, undercut that, and it found some sort of support. So
it found support right at the 10-day, right here, just shorter term price support, moving average support, a little prior high, and then, call this a mini cup and handle, tiny one up above that 10-day, if you will. So through that 52 area using the 10-day moving average, or the 52 area using 50, if you wanted to just pick a night, any one of those works well for being able to buy on strength and keeping your risk pretty tight. You'd almost use 51 if you really wanted to split it between 51 and 50.
Awesome. I don't have any others on my radar that we haven't discussed yet today. Anything else that you guys want to talk about, please post that in the chat. Don't see.
So everything, you can see everything's shaping up a bit more, with a couple of weeks.
Yeah, exactly. Yeah, we just need a couple of weeks, just sideways action in a way. Not a couple of weeks, just a couple of, pivots that build out, and things that are extended kind of move with time. Not, don't correct with price too much. Still above the 21, 23 EMAs. Correct sideways, mostly above the 23 EMA is what we would want to see. Yeah, Ross, a good question about, what's your what are your game plan? What are you looking to do over the next couple of weeks here? Is it mostly to add to existing positions? Is it to mostly watch what you have and kind of just?
So, yeah, obviously watching what I have, and so let's say, my core positions in the ones. So let's call it the Teslas and the Nvidias of the world. The Nvidia I don't have enough of, but anyway, I am absolutely looking to add to those. Right, those are my big cap liquid favorites. Let's call it that. So I'm absolutely looking to grow both of those positions as they offer optimal entry areas where I can grow the position at the right price without risking too much, preferably on strength. But I'm also continuing to look for the new ones. That's why I put a whippier, wider, looser, newer one like this up on there, just because we're starting to pick up a little volume, show some strength. These stocks have been strong over the last few weeks. So again, this is our riskiest, but definitely anyway, I'm off topic again, but if in case you're wondering why that's up there. But yeah, so I'm looking for newer names like this to continue to build and give us a reason to buy more. And as much as I'm looking for, I don't, to, let's say, start a position in something like an Adobe, which I haven't started yet, that I consider, a high quality name, let's say like an Nvidia or a Tesla that I want to. So these liquid, the liquid technology names that are basically leading the market, I have a very close eye on. Tesla, Nvidia, Adobe, let's say those three at the top for now, along with Netflix, which is maybe a little lower in its overall pattern, but has just acted incredibly well ever since it got going off the bottom. And then I'm always, I born and raised at Bill O'Neill, so I'm always looking for those juicy ones, right? As like the beginning, like when I was there, the Arebas of the world and the Ascend networks. But I would say that, honestly, I think we're so early at the beginning of, let's say, AI, quantum computing, the beginning of, new big improvements in healthcare and that sort of thing, that we haven't even gotten to those names yet. Like those were the juicy infrastructure names after that whole tech boom got going. I feel like we're just barely starting to figure out what's what here. So I think, and eventually that will change. It's not unusual to see, a group like the liquid big cap tech names, especially the semiconductors and softwares, be the leader of the leaders. Eventually it might shift out of those names. They may slow down and you might see it flow into specialty retail and healthcare. I'm just making it up. And those may be the ones, while these names will still go higher, they won't be the juice. It'll be the mid-capier, newer names that, that aren't necessarily the Ubers, the Adobes, and the Nvidias and Teslas of the world. Right. So right now it's just time for these stocks. So I'll be honest with you, I'm much more interested in getting into an ADBE, even though it's not anything. I mean, once it gets going, you see how it can move. It's got every reason in the world to finally get going again. It's had a nice long correction here. So these powerful moves up and the super, massive volume, and then this classical taper off as it moves sideways. It's just, they're so peaceful to trade. You get rocket power and peace at the same time, because I like the ones that have proven to me that they can be explosive on the upside, and when they do decide to take a breather, they don't move light. They tend to remain much more organized and in control. So.
Awesome. I think we could pause there. We've hit time. With respect to so yeah, there was a question on upside potential of a stock. Richard answered that, and that might be something that you guys can cover in the video, you and Richard, sure, on how do you determine upside. Maybe you look at the weekly, do a weekly base count, et cetera, et cetera.
Right.
Based on that.
Yeah. Correct. It's going to depend, just like you're saying, on what stage is that stock in, is the group in, where, that sort of thing, versus is there, is it right. So where is it in its move is going to be a big part of it.
Awesome. I want to wrap it up just by plugging the historical analysis masterclass. If you didn't catch the start of it, it starts in 2 days from today. As TL private members, you guys get an extra $100 off the early bird price, which is now will be $295 for all TL members. It's 10 webinars, 230-page textbook. special guests throughout the 10 webinars, homeworks, workbooks. We'll be covering 120 years of the market over a span of, 6 weeks, 7 weeks. And I think it's, it's going to be, we're going to start in the 1900s, go into 1950s, 70s, 80s, 90s, go into very, the details of what broke out when, which traders caught those breakouts, how did they catch them, how did they trade them, where did they position, where did they exit, how did they buy, and how did they sell. And it's going to be a deep dive into just the history of the market. And I think this is, any masterclass that we do, we did one with Stan, which, has never been done before. We did one with Oliver, which was he was the 2019 champion. We did one with the IPO guys that did a deep dive into just IPOs, nothing else. This is no different. And we're most excited about this one because it goes back into history, studies Wyckoff from all the way to Wyckoff to recent USIC winners. So we're super excited. We're working hard behind the scenes, and I hope to see many of you there starting this Saturday at 11 a.m. Eastern. So with that, I wish you guys a good evening and best of luck for the rest of the trading week. If you guys have questions, post them in the discussions. The entire team is focused on interacting with you guys through discussions, through the chat, to make sure that you have your questions answered. So best of luck, and I wish you guys a good evening.
Thanks, everyone. Have a good night.